Hello, my good friends. My name is Joseph Ejike Oji, and I want to use this opportunity to wish all of you a happy Christmas. Merry Xmas. Enjoy yourself. Eat good food. Um, Drink pepper soup. Drink wine. Make merry. Be happy with your families. Um, Today, I'm welcoming you back to my show, Stock Analysis Simplified. Always remember that my goal is to help you get rich by showing you the companies that you can put your money into and then reap the reward in a few years. Remember, I always stand with the buy and hold strategy, long-term investing. If your interest is in short term, like buying your stock today and selling it tomorrow to make money, or buying it this week and selling it next week, then you are in the wrong show. If you're a long-term investor who wants to make money by buying good stocks, holding it for 2 or 5 years, and then when the value appreciates, then you sell it to make money, then you are in the right show. Welcome. Now, today, the stock of my interest is the DELL technology. I'm sure all of you know DELL. DELL is the maker of the DELL computers. So that will be our stock of interest today. So as you know, I think I said it already, DELL Technologies make computers and other DELL computers and other products. The company is headquartered in Texas, and it specializes. Their main area of specialization is to provide a range of storage solutions, things like servers, network products, desktop computers, notebooks, and other related services. So not only that, the company also offers some type of cybersecurity solutions, customer financing, and so on. Now, my analysis of this company will, as usual, be based on 3 areas. First of all, is the company's balance sheet. I'll look at it. Not all the items in the balance sheet, some of them. Then the company's income statement and cash flow statement, I'll look at that one as well. Then the company's stock information. So now let us move, get the ball rolling, and this will bring us to this place where we can get information on their technologies or any company free of charge, and that place is no other place than Yahoo Finance. So as you can see, let me type it in. Finance. Okay. Finance.yahoo.com. Okay. We are there now. Now let us pull up their technologies by typing this trading symbol, which is DELL, D-E-L-L. It will pop up. You can see right there. So you click on it, and it will open up. You can see their technology so far. The stock price is $75.71 per share, and it is up by 0.25% so far. As of last Friday. So now let us do more digging to get more information about their technology. Now I will begin by looking at the graph for their technology, the graph that shows the performance of the stock. You can see the graph right here. And what do I see? I look at this and I see that the as usual, stock goes up and down. So it is very erratic here. So I'm gonna make some sense from this graph by inserting a moving average, a 200-day moving average. Remember, we have 50-day moving average and 200-day moving average. For me, and for other long-term investors, I recommend 200-day moving average. So I'm going to put it right here for them. Let me make sure you're seeing this first of all. Make sure you're seeing this graph. Okay. So I'm going to put a 200-day moving average. Go to indicators, moving average. I'm going to put 200. So we can make sense of this graph. Okay. You can see the moving average right here. And this is from 2019 to 2023 and beyond. And I can see that this is the moving average right here. See the line? Okay. I can see that for the most part, DELL technology is trading above the stock's moving average. So this the fact that DELL is that the DELL stock is trading above its 200-day moving average is typically a positive sign for any company that for that company's stock to trade above its moving average is a typical positive sign. So for DELL, it indicates a general upward trend in the stock price. And this suggests that it suggests investor confidence and a potentially good opportunity for long-term investment. Let me see if I can put 2-year moving average. See, even with that, for the most part, it's trading above it. This place, this is for 2022 to 2023 and beyond. I can see that it's way above the moving average. A good sign. Now, at this point, we're going to look at a few items in the income statement, balance sheet, and cash flow statements. So I'm going to take you back so that we can look at some statistics about DELL. So we're going to look at the statistics. So scrolling down, you can see that, remember, this is for between December, between February 2023 to November 2023. So this is a year of analysis. Let's see. Under the profitability, actually, yes, under profitability and management, let's look at profitability first. Profit margin of 2.9%, 2.92%, and operating margin of 6.68%. Well, as you can see, DELL Technology reported a profit margin of 2.92% and operating margin of 6.68%. Now, even though the profit margin of 2.92% is relatively modest, let me make sure I'm saying this. Even though it's relatively modest, it does demonstrate that the company's ability to generate profit from its own revenues. And the operating margin of 6.68%, as we know, it is a key indicator of the efficiency of the company's core business activities, because it suggests that a reasonable level of operational efficiency. At this point, we're ready for marketing effectiveness. Let's look at the return of assets. The return on asset of 3.64% reflects how effectively the company is using its asset to generate earnings. So remember this metric, return on assets, indicate that DELL Technology, indicate that its ability to translate investment into profit. Okay. So, but the bottom line is that it is positive, and it reflects that DELL is effectively using its assets to generate earnings. Earnings is another name for profit. Now let's look at the general financial health. We look at the income statement. See the income statement here. The revenue of 91.15 billion. Revenue per share of 124.24 billion, and then the negative quarterly revenue growth of -10%. What does this this threatens means? Well, first of all, let's start from the revenue of 91.15 billion and a quarterly revenue growth of 10%, which is negative. Okay. Well, this negative of 10, this means that negative 10% of quarterly revenue growth means that revenue declined. That's what it means. So, in other words, the company's revenue of 91.15 billion with a quarterly revenue, the company's revenue of 91.15 billion with a quarterly revenue of quarterly revenue growth of negative 10% year over year, could be a concern for investors looking for growth potential, especially they're looking for growth potential. Now, the company still managed a substantial gross profit margin of 22.69 billion, which is promising, of course. Now, let's look at the what is called debt ratio. Okay, let's look at the debt. That debt. Well, let me see. Yep. Debt. So now we have that the total debt is right here 27.47 billion, which it means that that the investors will look at it as a concern, especially those risk averse investors. And the current ratio of 0.76, 76 cents. Well, 0.76 means that for each dollar of debt the company has, it has only 76 cents to pay it. So that is not good. Anyway, the current debt, Dell Technologies balance sheet that shows a significant amount of debt at 27.47 billion. And this could be a point of concern for some investors, especially those that are scared of risk. Now, the current ratio of 0.76 means that, it basically indicates potential short-term liquidity risk. And, and it suggests that the company might struggle to cover its short-term debt liabilities with its short-term assets. Yeah, that's what it means. Short-term liability and short-term, short-term liabilities means those liability, almost I will call it the current liabilities, those that are due in a year or less. Well, but for this particular analysis, I will use monthly, short-term, monthly bills like energy bill, salary, and so on. The amount you spend for your day-to-day operation, if you cannot meet up with those, the business is basically gone. So I can understand why some investors might have issues with that. So now we have next is the EBITDA. EBITDA. Look at EBITDA. EBITDA simply means earning before interest and taxes, depreciation, and amortization. So EBITDA of 7.91 billion. It is substantial for a company like Dell, I would say, and it indicates strong profitability before the deduction of interest, taxes, depreciation, and amortization, and is a positive sign for investors as it shows the company's ability to generate profit. Now, let's see. These are the key things that I need for this company. And let's look at the other. I will look at the dividend. For now, I'm going to leave cash flow for now. Let's just look at dividends. So the dividends, let's see if the company pays dividends. Okay, let me look at the historical data. Okay. Now, I'll make it December 2022 to December 2023, and then I'll make it monthly. Okay, make sure you're seeing this. Yep, I'm going to make it monthly. Okay, you can see, and then I'll apply this. You can see that the last dividend they paid, the last dividend they paid is 0.37 cents per share. Now, remember, most investors like companies that pay dividends. I mean, for a company that pay dividends consistently, that means that company is making money. If they're not making money, they won't be paying you. If they're not making profits, money, they will not be paying you a share of the profit. So it's a good sign for them there, as you can see from here, that it consistently paid dividends, with the last one being 37 cents per share. So what does that mean? So it means that the consistent dividend payment of 37 cents per share every quarter reflects a commitment to return value to investors. This is an attractive feature for long-term investors, especially those seeking regular income, regular income stream, and from their investments. So now, what is my overall assessment? Well, let's see. Now, considering the above factors, I would say that DELL technology presents a mixed bag. I mean, there's some good news for the company. There are some good parts and some bad parts, based on what you have seen so far. It has good and it has bad. And I would say that the company's ability to maintain profitability and pay dividend is positive. However, concerns can arise from the declining revenue growth and the high debt levels. So naturally, long-term investors should, this is what I'm advising, that long-term investors should weigh these aspects against their investment goals, and their risk tolerance. Now, simply put, let me put in as simple as I can. For those who are focused on steady income through dividends and less concerned about aggressive growth, then for those kind of long-term investors, their growth potential and their technology could be a good investment. Now, but if the long-term investor is seeking high growth potential and is scared of high debt levels, then it may not be. But generally speaking, I would say that DELL shows strength in certain areas. And investors should, long-term should consistently monitor the company. And then, for me, based on what I have seen so far, I would say that for the stock of, what is the final analysis for the stock of this company? I mean, you have seen it. The only issue I would say is that to me is concerning is the debt and the ratio, debt ratio. So, but other than that, it has a lot of positive. And usually, when a company is expanding its operations or doing some projects, they are borrowing money to do some projects. They have a negative. The debt ratio will be low because they are expanding their operation. And I believe that that's what DELL is doing so far. So my final decision for this stock is a yes, to buy stock and hold. Now, this is what I decided, my suggestion. Now, for you, remember that it is up to you. While their technology shows strength and in certain areas, you, the investors, even though I said buy, remember that you all have your individual desire with respect to the investment you want to buy and hold. So you can either use my recommendation, or you can closely monitor their technologies, monitor its revenue growth and debt management strategy for at least 6 months or 1 year to make sure that they align with your long-term investment objectives. Other than that, like I said, the final answer for DELL, my final answer is this: bye. Thank you for listening. And once again, enjoy your Christmas. And when you get a chance, subscribe to my channel. Thank you. Have a nice day. Bye.